Hello everyone. Today we're going to talk about Bitcoin, which I have to say is really lagging behind the US stock market. Over there, the S&P 500, Nasdaq, and many companies are hitting all-time highs, while Bitcoin hasn't even come close. And yet, everything is going according to plan. Attention, what you see here are daily candles. In previous reviews, we talked about how Bitcoin broke through the white line of the downward trend. This line is drawn or constructed using two local highs or global ones, call them what you like. And it also broke through a very important level. Here it is in the green circle. That's $76,470. This was the lowest close in 2025, after which, and by the way, it was also the trend reversal point. So here the trend changed from downward to upward, and at some point we found ourselves below this level and it became a key resistance. After Bitcoin broke through it, probably on the third attempt or so, we moved away from it. Well, when I say we, I mean Bitcoin. So Bitcoin moved away from this green level and came very close to the 200-day moving average. Now, we will focus only on those. So what happened? What happened was basically a completely normal occurrence. As we approached an important level, in this case, the 200-day moving average is an important level, a reaction took place. Yes, because it's logical to expect that from the 200-day moving average, we would go down somewhere toward the area of the 50-day moving average. Well, considering that halfway to the green line, or rather the distance to the green line is about the same as the distance from the 50-day moving average to the green line, only from below, we might test the level of $76,470 and at the same time test the 50-day moving average and then make some kind of decision. From the perspective of candlestick structure, yesterday we closed with a bearish engulfing pattern. And by all formal indicators, this suggests that on the daily candles, Bitcoin has turned downward. In other words, it is now in a downtrend. So what can we expect? We can expect, once again, a move toward that same level of $76,470 and toward the 50-day moving average. Because look, it was broken quite a while ago without a retest, essentially. That is, here we were, trading along it. There you go. Then, when we finally broke through it, we moved away and didn't even come close to it. Well, here we got close, but that doesn't really count. The same applies to the 100-day moving average. So, a decline toward these moving averages is in principle quite logical. And the first target on the way down will be 76,470. What could happen? A situation could occur, but we can only speculate about it. So far, there's no sign of this on the chart. If Bitcoin, say, in a certain number of days, 1 day, 2, 3, or 10, engulfs this red candle from yesterday. Well, let's hypothetically imagine Bitcoin closes today above $81,500. What would happen in that case? There would be a reverse engulfing, but this time a bullish one. And within the framework of this engulfing, we will most likely see not only a move toward the 200-day moving average, not only to the important level that was established at the reversal point in February 2025, which is 84,250, but we could just immediately shoot up to the level of $94,270. But for this to happen, not later, not sometime in the future, but in the coming days, we need to see this candle engulfed. Why do I assume this? I'm only assuming, I don't know for sure. Why do I expect such a move? If this candle, which has now reversed the trend on the daily time frame, is engulfed in a short period of time without approaching the level of 76,470, then we interpret this as a shakeout of long positions, a shakeout of late buyers, and with the aim, accordingly, of a much longer move. Moreover, this very structure kind of hints take a short because it implies a downward movement. There are simply no alternative interpretations of this structure. We can only say that if, say, in 1, 2, or 3 days we engulf this red candle with growth, then the movement will be not only towards the 200-day moving average, because in fact we've already approached it, we've come very close to it, and not only towards 84,250, but we can notice, or rather Bitcoin can notice what's happening in the US stock market and head towards 94,270. I won't talk about higher targets for now because there are certain factors indicating that Bitcoin might not go any further. That's it. Now let's remove all the markings. Here we can see, yes, that we have a bearish engulfing pattern. The potential target is the 50-day moving average. There's some kind of zone here, yes, $75,700. This is roughly where Bitcoin could go. Now let's look at the weekly candles. On the weekly candles, at least for now, and today is Friday, nothing has fundamentally changed. In the previous review, we talked about how right here on this green candle from April 20th, Bitcoin engulfed this huge falling candle from February 2nd, which set the yearly low at $60,000. That means its technical target on the weekly time frame is the base of the previous red candle, around $87,000. And around $88,000 is where the weekly moving average lies, so potentially we could miraculously reach the same level I mentioned for the daily candles. Let's go back once again. Look, I'm turning on the markup. What is 94,270? 94,270 is some kind of reversal point that marked the boundary of the sideways range where Bitcoin was from November 25th to January 26th. Well, basically, how long was that? End of January. 3 months, right? November, December, and January. So this is the upper boundary of this sideways range. 94,270. In other words, it has absolutely nothing to do with any weekly candles. But lo and behold, if we remove the markings and switch back to the weekly candles, we see that $94,000, well now it's 95, this is the area where the 50-week moving average drops from 95, and it could go down to around 94. And why is this so important? Because we broke through the 50-week moving average from above without a single retest. That happens. But as a rule, even if the market is going to keep moving further down, say towards the 200-week, the 50-month, the 100-month, and so on below 60, technically it would still be correct to come back and test its strength. Is this really a decline? Did we really break through it? To come back to both the 100-week and the 50-week levels? Accordingly, from the perspective of weekly candles, we have a target range, but I can't draw it here because all the drawing tools I have are set up for daily candles. It's right here. It's between 88,000 and 95,000. Let's put it that way. And finally, let's look at the monthly candles. What do we see here? On the monthly candles, so far we see nothing. We see, yes, our May candle is growing, but you know the phrase well known to all traders and investors, sell in May and go away, meaning sell in May and leave the market. Why? Because, as a rule, business activity drops in the summer and the markets stop growing. And this usually works. Why do I say that so far we don't see anything definite here? Because it's only the beginning of May, and if, God forbid, the May candle ends up being dumped and turns red, if it's sold off, that would be a very bad omen, and it would be, well, for the long traders, for the short traders, everything would be fine. And it would indicate that Bitcoin is heading at least toward the 59,000 area to retest the February low, which we now know is $60,000, and potentially it could go much lower to the 40,000 area where the 100-month moving average is located. Yes, so even amid all this euphoria, don't lose touch with common sense and reason, and remember that anything can happen before May closes. But if May closes above the February candle, then we automatically get a target in the area of the January candle's opening. That's $87,500. And if we absorb it, then it's likely we'll go somewhere into the middle of the November candle. That's $98,000. Or those same 94, 95 that we talked about, or even 110. But that's already, more like speculation. Let's wait and see how things develop, at least on the weekly and daily time frames. Subscribe to the channel. Let me remind you that this review was done on the Kevan Fury platform. I personally open trades here, I personally trade here, and not just by myself, but together with you, I analyze financial instruments, both cryptocurrencies and stock market shares. Goodbye.